Hey guys, Todd here. Welcome to the Wednesday webinar live stream. It is now March 6th. Hope you guys are doing well. Team trading analysis team, just give me a quick heads up. Let me know everything's firing. Yep, no, all set there, Terry. TA team, let me know if we are good. Let me get the questions up. And I got a good show for you guys today. Got a lot to talk about. So let's see here. There we go. All right. Good morning, guys. So futures are flat. Kind of a quiet market in here. We're going to talk about that. A lot of things happening here as we come into March. Winter's winding down. One of my big concerns right now is I missed garbage week last Wednesday. Wednesday's garbage day, and I've got double the amount. And this is what happens when you guys kind of grow up and become domesticated. Garbage day and recycling day becomes one of your favorite days of the week. I missed last week, so I've got so much stuff outside. And at the end, I'll turn it around and I'll show you. I'm just worried that the guys are going to come by and only grab the cans and not get the other stuff that's kind of overflowing. I was hoping they'd come early. That's what's going on in my crazy 40-year-old life. Anyway, all right, so obviously having some fun. Okay, so what is happening in the markets? We'll get to that. But before I do, who's going to the New York Expo, the Traders Expo next week? Who is going? I am set to speak. Let's do this. New York Traders Expo is going to be March 10th through the 11th, through the 12th. I'm speaking the 10th and the 11th. I'm actually one of the 3 keynote speakers, so it'll be kind of fun. That'll be this one. It's going to be me, John Nigerian, Tom Sosnoff, and one other gentleman in terms of keynotes. That'll be fun. I'm doing a panel earlier that day, and then the next day, optimizing your options using Fib and Elliott. So that's the New York Expo. So be sure to stop by and say hello if you're going to be there. And we'll have a little bit of fun. Okay, so that's that. I'm just going down an agenda. Like I've got a official agenda here. This show is being built out. Other thing, kind of update, I'm really close to signing a lease on office space, which will become a pretty cool studio for this show as we grow and evolve. You guys are laughing at my shirt. Hold on. This is the official Upstate Distilling hockey jersey. Lucky number 13, right? You guys are laughing at it. That's all right. We have a hockey team on it for our Upstate Distilling, our distillery, and I think my partner's in on the webcast now. So, plus it just kind of goes with the color theme that we have here on the show, right? Blue and yellow, and so I'm getting all color coordinated here. All right. So from there, guys, we're going to go right in. I asked you guys on Twitter, if you guys don't follow me, at Todd Gordon Trade, to throw a question in. And a good friend on Twitter, Lance Fogel, put something in there, which I think was a really important question. It's kind of central to everything that is happening in the markets right now, in that I have a general question. What is happening with these broader markets? And guys, I've been kind of pounding the table on this for some time, in that this is such a critical zone in the market. I expected this to happen. The markets, I think, are very much at a standstill, as Lance correctly points out. And there's a lot of reasons. I've talked about it here on the Wednesday live cast. I've talked about it on CNBC probably 5 or 6 times at least. This is a critical zone. Anybody who's ever picked up a technical analysis textbook here has probably identified some reason why we're at resistance. All right. So if you haven't seen it or you haven't seen me go through this kind of explanation, here we go. If you follow me at all, you've probably heard this 10 times as I've mentioned. Number one, you've got a triple top here. 1, 2, 3, pending on, or you would actually say we have a fourth test, and potentially we backed away initially. We have a fifth test here of this zone from 2800 to 2820. Number one. Number two, we had both moving averages, the 200 SMA and the 200 EMA, that were being tested. We've broken both. And that's just kind of the great divide in this market right now. If you're above or below the 200-day moving average, that determines if your particular index, sector, industry group, or stock is weak or strong. I think there's pretty much, I don't have stats behind this, so I'm just going to put this out there. I bet you half the market, or more than half, is above the 200-day moving average, and the other half of all stocks indexes are below the 200-day. I think that's the line in the sand here. So there's a lot of decisions being made, and make no mistake about it, the algos and the quants and system type guys are certainly allocating and divesting based on a particular market or sector's location or proximity to the 200-day moving average. So I think there's a lot of back and forth. So you got the triple top, which you could say that we're now doing a fourth test of this high. You got the 200-day moving average. For those Fibonacci types out there, 78.6% retracement, which I think is actually more useful than the traditional 61.8% retracement. I just see it coming into play more. If you take 0.618 and you just simply do a square root, there's your 786, right? And a move that does not, a market that does not stop at the 78.6, which is the square root of your golden ratio, traditionally heads up to the 1.272 extension. So we go from retracement up to extension. If we don't hold this as resistance, bottom line, guys, I think we're heading up to that 1272 at 31.27. That's a long shot. All right. So where do we get 1272? Well, same thing. You take 1.618 square root, and that's 1272. Those square roots of your fib ratios work quite well. All right. So that's the other thing that's going on. So I think that's like the third reason why we are such at a standstill here, because there's so many major decisions being made from a technical point of view. The fifth reason is, there's a couple different ways that you can count this rally from the December 24th low. I would never sit here and tell you your count is wrong if you're following the guidelines and the rules of the Elliott wave theory. There's a couple ways to interpret this count, but basically, guys, I'm really trying to stretch this out. I'm trying to get very bullish here on this particular account. Let the market go as far as it wants. So I'm doing a 1, 2, 1, 2, 1, 2, 1, 2. So I'm actually tracking. This was a third wave of 4 different degrees. 1, 2, 3, and then green 3 would be your fourth degree. So for me, guys, I'm actually allowing and positioning for a continued push up, more back and forth, and eventually we move higher in wave 5. I could be right. I could be wrong. I don't care. I have a game plan. I'm trading based on that game plan. So the biggest position that we're carrying with our members is this. Let me just pull up my actual platform. You guys know that's how we roll. Real money, real cash, real wins, real losses, full transparency. It's the only way to do it. So this is the trade that I have on. It's a big unbalanced butterfly in the SPX. I'll show you the actual position here. It's in the 3 Mays. It's a 2640, 2760, 2835. Okay. It's got very slight negative delta, only -2 delta, now $1.72 as we're 30 minutes ahead of the open here. So it would make a little bit more money if we back away here. But the important point is, you're working $50+ of theta a day. So today is March 6th. Even if we go out 10 days, here's your zone, anywhere from 28.28 all the way down to 27.15. That's the zone. The butterfly is meant to take advantage of melt at the body. So I'm short 8 of the 2760 puts. We want those to melt away. Those guys are trading at $46 right now. I'm long 4 of the 2230s. Those are going to hold the value. Those are going to hold the positive delta. And the 2835s are probably going to melt away because those are going to be above the market. Okay, those are going to be above the market. So we shall see. We shall see. That's our primary position right away. Actually, it's the other way around. Sorry, we did a put butterfly. I'm describing a call butterfly. 2835s are going to hold the value because those guys are going to be in the money. 2640s are going to melt away. Those are only trading for $22. Those are out of the money. Those are going to melt away. 2760s, we want those to melt away because we're short. 2835s are gonna kind of hold the value because there's intrinsic value in those options. Okay, so that's kind of the trade we're looking at because again, the wave count I think is gonna be like this. Now we could just back away. Okay, I could be wrong. I'm wrong all the time. It's not my job to be right and predict where the future market's going to be. That's just not what trading's about. When you go on TV or you're an analyst and you're making big sweeping calls, your job is to be right. When you're trading, you just need to figure out how to control the now. So if I'm wrong, I certainly could say that the move up from December 24th is a 5-wave move and we're about to sell off from the 786. It's possible. Okay. And if that's the case, fine. We're gonna certainly adjust the position. We're going to recognize that the 786 retracement is complete. You could make a 5-wave move out of this, and we're going to drop away. But most importantly, I have a plan. Okay. Let me just get these questions over. Okay, perfect. Andrew, third of a third. Really, where is the straight up momentum? Okay, it's actually a great point, Andrew. That's one of the reasons I'm not a big indicator guy. I'm really not. And Andrew's asking third of a third. Got to give you points for originality. There is no momentum divergence, Andrew, on RSI, and I've been waiting for it. We're finally starting to get it. We got a high reading of plus 70 on just the standard 14-period RSI. We're starting to get a little divergence, but up until here, dude, we had no momentum divergence based on daily RSI. So that's kind of, I'm not a big indicator guy, but for the first time in a while, it's like that's actually quite useful in terms of momentum on the upside. So there it is. Susan didn't know what. Hey, from Frankfurt. Very nice. Very nice. Oleg, I'm well. How are you? So, okay, so that's that. So that's the SPX. Longer term count. Here's kind of what I'm working. Let's do this. Visibility less than 1 week. That's my plan for now. Okay, that's what I'm working. I think, as I said, over the next, into the middle of 2020, so the next year and a half, I think for traders, it's going to be wonderful. I think for investors, money managers, passive guys who have done fine in a straight up market that requires no skill, it's going to be pain. It's going to be pain. I think the next 2 years will be the traders' active management will come back, which is why, as you guys know, I'm kind of adding a new component to my offerings for the first time in 10 years. Just the other thing I'll note is that the rut continues to be a little weaker. We're not even at a 786 retracement of what we've lost since September. Actually, the rut actually put in a high late August. We've dropped away. We're not quite at that 786 retracement in the rut. The rut is under the 200-day moving average, which I find interesting. The rut has been weak over the last couple of days. Small caps are kind of coming in. There's been a rotation out of these second tier, high flying momentum tech service kind of companies like Twilio, like Etsy, like a couple other ones. I hold them in my portfolio, but there's been a rotation back into kind of more established, large mega cap tech like Apple and Facebook and Google and Amazon. So kind of the older FANG, the older tech guard is coming back. Cisco's doing great. Intel broke out. So that's kind of bullish for the market. We continue to be very much in a back and forth, kind of confused market. NASDAQ is also not quite at that 786 retracement, which is 7272. This is the NDX 100. So we certainly want to watch for that. Andrew brings up momentum. No momentum divergence in the NASDAQ, which I find quite interesting. RSI just continues to make new highs, does not get into the 70 area as we're below resistance. So could be more room to go. Could be more room to go. We shall see. Okay. So from there, Robert, we'll try to jump into Amazon if I can. Hey, there's Ryan right there. My partner in the distillery. What do you think? What do you think, Ryan? I got to get you in for a podcast. Looks good, right? You did a nice job designing these, buddy. All right. So back on track. I actually do have an agenda. Can you believe it? So Lance, thanks for that. That's my long explanation as to why these markets have ground to a halt. Obviously China deal, we know that. We know there's a lot of political turmoil. We're through earnings. I think the Fed has become less and less of a factor. I think they're just whatever. I don't think they're in any hurry to raise rates. I think data begin to deteriorate, whether they succumb to political pressures or data, or they were really responding to economic data. I don't think the Fed is much of a factor anymore. Okay, so that's stock indexes. Something else that I'm noticing, I was discussing with my members in the video last night, was emerging markets. And emerging markets were a major reason why Western markets began to falter. All right. If this is EEM, emerging markets ETF, if you were to take an overlay, let's just do a quick one here. Let's do SPX and overlay on top of EEM. Okay, look, the S&P's in green, emerging markets are in white. They're trading pretty well together, but look at EEM. Dropping away white as the S&P was moving higher. Okay, fine. Finally, the S&P woke up. S&P dropped away. I think this was a major reason as the Fed started to get hawkish. Jerome Powell says, we're going to deplete the balance sheet. We're going to let it roll off. We're going to raise rates. Dollar's getting strong, choking off emerging markets. Most EM debt is denominated in US dollars. Got really difficult to service that debt. EM really took it on the chin. S&P woke up and said, okay, wow, we're selling off. That's cool. But look at what EEM did. On the same day the S&P made a low, we made a double bottom that was equivalent to the S&P 2650. S&P goes down to 2360, 300 points lower, but EEM didn't confirm. And we're beginning to move higher now in emerging markets. Okay, the two are recovering in lockstep. I think EEM is a leading indicator to the same degree that small caps usually are a leading indicator to US markets. So now we have this EEM thing, which is going up like 1, possibly like an ABC expanded flattened 2, wave 3's on the move. We're through the 100% projection of green 1 and green 3. And all we've done is consolidate at the 100% at 42.28 in EEM. On top of that 200-day moving average, 1.618 in EM is 45.04. That's $3 from now, 275 from now. That's a typical wave 3 projection. Further, as you know, wave 3 needs to break down into 5 smaller waves. So I could say that's going to be like 4, and we're going to have one more move up. So EM is actually starting to act pretty well here. Possible that we're in a triangle count here on emerging markets. This is the 1/2 day chart. A, B, C, D, E, starting to move on up. Okay, so that's kind of interesting to me. You guys notice also Chinese stocks, which Asian stocks are about 49% of that emerging markets ETF. And you guys notice, did you guys watch some of the Chinese stocks yesterday? There were some Huya, HUY up 22% on earnings. Some pretty strong names in there. Let's take a look at a few of those. But before we do, basically FXI is very similar to EEM because it's like half of the index. That's Hang Seng. That's Hong Kong right there. I mean, the ETF went from 38 to 38 to, from 38 to 44. That's a $6 move as a percent of 38. Pretty serious, right? So we're starting to get some movement in Asia. Some of the stocks, as I mentioned, some of the Chinese stocks, Huya was just a big, back over. Sorry, here we go. First time I made that mistake. There's FXI right there on the move up. Certainly a nice move there in China. So as I was saying, Huya, HUYA, just a ripping move yesterday based on earnings. I'm thinking that, we could be up in wave 3. Same kind of conversation, 100% of orange 1 and orange 3. Net percent distance traveled right here, which was 134%. Equivalent 134% would be at 2762. We didn't get it. So the 1.618 puts you at 3561. You can begin to count a completed 5-wave move inside of 3. So you don't want to just say like pile in now because the move is obviously over or getting close to. We might have another $5-6 to go, but at some point we're going to get the wave 4 pullback. HUIA. IQ, another one looking good. 10 cent, which is the big granddaddy up there. You can easily make the case for a motive, impulsive, beautiful move up there. We should have room from a green 3. It's getting a little bit long because we do have a completed 5-wave move. Wave 4 is complete. Wave 5 of 3 is going. You might have into the 50s in 10 cent, and then you begin to pull back. But that's kind of my theory. That's kind of what I'm looking at in the broader markets is a little bit more strength, but then going into a big time wave 4 consolidation in the markets that would last a month or two, and you better be ready. We're going to be shifting our tactics from directional to more theta positive, delta neutral option trades, collect some income as the broader markets do this. Enter into a 4th wave that should last, could take you into the summer. So you better be prepared for that. Okay, right or wrong, you have a game plan, and you can prepare accordingly. Alibaba, same thing, coming back. Nice wave 4 double bottom there at 131, beginning to move up. If it's truly wave 5, we could, and the longer term weekly chart begin to move up. So watch China. In terms of our portfolio, you guys know we break it up. The way I run my business at Trading Analysis is I trade an option account with real money, and I trade a stock account with real money, and the two are meant to. They've been operating separately, but in the next year or 2 years, they will eventually come together. We're going to run it like a complete, kind of a complete portfolio. Take leveraged option positions to supplement or complement what we're doing on the stock side. When there are situations we're coming up into Elliott wave corrections, you can begin doing option strategies, income strategies, delta neutral, theta positive stuff to kind of supplement income on the stock side if we're not moving. Or if there's a very big directional move, you can obviously leverage up in the options market, take advantage of a short move while you're holding the longer term portfolio, hopefully to get into that year plus holding for long-term capital gain. So that's what we're doing. So this is the stock portfolio that we've been working on. As I said, real money, real capital every single day. This is the actual portfolio right here. Monitor. Here's all of our positions currently. We're tracking it on a spreadsheet for our members, which is somewhere in this big, massive windows. So right now, we began this portfolio. I put $100,000 in just as of November 14th. We're up 4.4%. In that time, the S&P is up 3.26, which is very good. We're outpacing the S&P, but the best part about it is our risk-on positions, which are here. I'm showing you my total portfolio. Only total out to be $42,000 of a $100,000 portfolio. So I'm only 42% in long equity positions, but we're outperforming by 120 basis points. I have about 13 to 14,000 in risk-off hedges, and I have the rest in cash. So we have, 50-something thousand in cash. So we're only half in this market, still outperforming, which I love. So we're waiting for a good opportunity to kind of deploy some cash, start further distancing ourselves from the S&P, and as I said, it's going to be a trader's market. Okay. So how about questions? I've been talking too much. What do you guys have? What do you guys have for questions? Oh God, I wasn't showing you my. I suck at this. I got to tell you, I'm going to hire someone to run this. I wasn't even showing you my screen. I'm terrible at this. It's a lot to do for one person. I'm going to hire. There's going to be like a stage manager, production guy. So again, still beta. All right. So here's what I was showing you in that portfolio. The points kind of stand. Maybe you could have followed along without the screen. 42,000 in long equity positions. That's the entire portfolio. Here's our risk off positions. 13 recently closed, and like I said, we're up 4.4% from on top of the S&P's 3.26 since November of 18. Okay, so that's that. All right, back to questions. Sorry about that, guys. At some point I'm gonna make this a real show and have someone run all the technology. It's a lot to do for one person, but good for now. Good for now. Okay, so good question there, Lucas. How do you color your fib ratios in Motive Wave? Good question there. All right, let's transition to that. How can I do this? Motive Wave is the software that I use to do my Elliott wave analysis. I use two pieces of software for charting. I use Motive Wave, that's pretty much the best for Elliott wave and fib, and then I use Thinkorswim, which is really good charting software just for my kind of just call it my my cafeteria technicals, just basic moving averages. You should be able to see it. Let me get my VMix up here. You should be able to see it. Let me switch to this screen right here. Traditionally, guys, what I do is my chart setup. As I mentioned, I have Thinkorswim and I have Thinkorswim and I have Motive Wave. What I usually do is, let me just take this and throw that up there. I have four monitors, and each monitor has a very specific purpose of what I'm doing. Let's kind of switch. This is going to be Tech Corner. This is a new segment of the show, Tech Corner. The way I set it up is I have my longer term chart here, usually a monthly or weekly over here. Okay, right? So this is on like this half. In fact, let me do. Okay, so right here, this one is usually my monthly or weekly chart. This one is going to be 1 degree less. Let's say if this is the monthly chart, this is copper, monthly copper. This is weekly copper. That's going to be daily, and that's going to be intraday, usually a 195-minute chart. That's Thinkorswim. Over here are all my sectors, stock indexes, individual stocks. Okay, so I always set it up and have my basic macro quote sheet, S&Ps, NASDAQ, Dow, all the index futures, ETFs. I've got gold, silver, crude, dollar, 30-year, 10-year, 2-year, dollar, VIX, blah, blah, blah. Below there, or over here, I have all my sectors, right? And if I click something, it's linked such that it populates all the charts. So I just clicked on XLI, the sector spider for industrials, monthly, weekly, daily, half day. Over here, I've got my internals. So I watch the internals of the market, like advanced decline, tick, trend, VIX, put to call ratio, skew, all that kind of stuff. And then up here on this one is where I have all my positions. That's my trading platform. The same kind of setup happens with Motive Wave. Motive Wave is a little bit more advanced, though, in terms of Elliott Wave. Same concept, same flow applies based on my monitor breakup. So I have on the longer term, I usually on the Elliott Wave count, I usually have weekly here, I have daily here, I have half day 195-minute chart here, and I have 60-minute here. Same concept. So I've got my quotes broken up. So there's macro, there's sector spiders, ETFs, my long setups, stock watch, etc. So here's Amazon. Okay, as soon as I click that, it populates all the charts. Now, I don't know if this is going to work. I'm probably going to break this and screw it up, but that's okay. Let me see if I can get this close enough. I don't even know if it'll focus. That's not going to work. I'll put this back. If you could zoom in, if you're standing right next to me, I have each chart has 2 or 3 tabs. The way that sets up is that's the different analysis file that we use. I always look at the Elliott Wave count, which I use on Motive Wave. I look at 2 and sometimes 3 and sometimes even 4 counts. We never go into a trade and say, here's the only count that we're looking at. You always have multiple ways in which the future may play out. I can't sit here and tell you I know exactly what's going to happen in the future. And if you sit there and say, this is the only way it must be, you're going to get run over as a trader. You're going to be broke and give up now. Okay. So we always kind of look at the market in multiple angles, assess different scenarios, and we deploy the wave count that offers the best reward to risk ratio. So this is my particular account on Amazon. Okay. If I were to go up to the S&P, click it, populates the S&P, I have 2 wave counts that I'm showing. This is the red count, and it's just an arbitrary name. You can call it anything. You can call it apples and oranges. If I were to click this tab up here, you're going to notice that it's also the S&P, but it's a different set of Elliott Wave analysis. So all these tabs are linked together, and we set up Motive Wave in a very specific way. We have a training course that's available on Motive Wave for Motive Wave to show you how we do this. But it's pretty cool. The software we use, organization, I think is really important if you're going to be a good Elliott Wave analyst and specifically a trader. We make our analysis available, the actual analysis files that contain the wave labels and the fib, we make them available to our customers. We serve them up to you via the cloud. So I actually have all of my analysis stored on Dropbox, which is the cloud. All of our users who are connected, who have Motive Wave, actually get my analysis instantly. So if I go in and make a change, and I go over here, and let's say I break down wave 3, I just did a little adjustment there, ABC, perfect, whatever. I go and hit the save button. What happens is that analysis that I just did in the S&P 500 was set up to Dropbox, and every one of our users who have Motive Wave or connected to a trading analysis version of Motive Wave get that wave count updated immediately. Their charts literally just change on the screen. This is the best way to learn Elliott. Okay, it's to watch it unfold in real time. You've got to know the rules. You got to know the guidelines of the wave count, but to watch the count kind of evolve every day, watch how we change it. But most importantly, not only watch how we change it, but watch how we trade it. The wave count can change. The wave count should change. The future is always changing, but watch how the position and the money that we allocate in the market changes as a result. So hopefully that makes sense. It's a great piece of software. It's very quickly will lay out. Let me actually switch the screen here. And let me show you. I'll pop up an actual chart. Actually, we'll just leave that over my back. It's fine. I'm going to take Motive Wave, which is usually over 3 34-inch monitors, squeeze it up, and put it all up on this screen. So what I was mentioning is the tabs, right? So here's the S&P on the red, weekly, daily, half day, 60-minute. And again, it's scrunched up on this little monitor up here. If I just click over to blue, oh, there's the other interpretation. Okay, there's the other interpretation, which is possible. I even have green count, okay, which is just another possibility that this was just a big 3-wave move down. I'm tracking 3 different counts. We're at wave 2, about to get hammered. We're in a wave 4, about to move up. You know, I'm not going to sit here and tell you I know what the future is going to hold. No, but it's all about allocating capital properly based on where the probabilities are of where the markets go in the future. To try to stress and worry about predicting the future, you're wasting a lot of valuable information, a lot of valuable energy, I should say. So the question was, sorry to go on that long rant, but I thought it was a good opportunity to talk about it. The wave counts and the attendant fib are color coded based on our preferences. Okay, so if I were to do like a wave 4 fib study, 4v2, the color codes stand for something. Blue is shallow, green is ideal based on the depths of prior corrections. So that's a 4v2 fib ratio. How about a 4v3? So what you're doing is you're analyzing corrective wave 4 compared to wave 3. Okay, and this is such a shallow wave 4. None of the retracements of the prior wave 3 will come in. But the 4v2, it's showing you net percent distance traveled in 2 was equal to the current 4, 2763, and we missed it by 6 points, 3 points, 2766 to 63, 4 points. So those are color coded based on fib ratios that we expect to come into play based on which wave count you're in the sequence. Elliott wave, guys, is not something you pick up in a weekend. That's why so many people just try it. They say, oh, this is really hard. Let's give up. It sucks. It's too subjective. Not everyone's willing to put in the work, and not everyone has that, ability to trust in the fact that you can't worry about, predicting the future precisely, and just being prepared and organized today. Because if you put yourself in a good position today, you should not have problems. You shouldn't be in a position where you're going to risk a lot of equity and capital. So I know where I am. I have an idea where we are in the markets, and our portfolio reflects, our options and equity portfolio reflect that. Okay, so with that being said, guys, we're 6 minutes ahead of the open. We are actually doing, that was a very timely question you asked. We are actually doing a webinar the 14th at 8 p.m. Motive Wave does their March Madness sale, which is I believe it's the cheapest price of the year. So we're going to do a webinar discussing how we use Motive Wave software on the 14th. If you want access now, I believe, team, will you throw me that quick link on Slack? I think it's tradinganalysis.com/MW. Let me get you that link so you guys can sign up. MW, I think that's it. Yep, that's right. So what you do, if you want to sign up for this webinar, which is free, which is Thursday night, we just give you the link here. So there it is, tradinganalysis.com/MW. Okay, and that will bring you to this page. And what's happening is Motive Wave just released a new version, version 6. So we're going to go through it. We're going to show you what we're doing. It's going to be 8 p.m. Thursday night, the 14th, and just basically show you how we kind of attack Motive Wave. So be sure to jump in there, and we'll obviously, if you're interested in the software, we'll show you how to take advantage of the March Madness sale, which is coming up. And we have a course that shows you how that we use Motive Wave. Terry Long, myself, we built it. Terry's an expert Motive Wave user, so we'll take care of you. If Elliott Wave is something you're interested in, Motive Wave is pretty solid. Okay, guys, that's that. I think we hit the agenda. We did indeed. So let me see. Any questions, comments, anything that we can take care of here? If I can only see your questions. There we go. Luis, what size monitor you use and what Dell? Yeah, I think it's the, I'll find that for you. I think it's the Dell U34. Yeah, it's this one. Actually, I cracked one of them, so I just replaced one. So I know the model. It's U3415W. These got 34-inch curved. It's not quite 4K, but it's almost 4K. This guy right here. Dollar. Okay. One thing that we did, I know Alex in our Forex service is short the euro. I believe they are still short, rightfully so, which means long the dollar. I actually, on the stock portfolio, we've been long GLD for pretty much this entire move in gold. We exited and we actually went, let me switch back. I know. I caught myself this time. We actually caught most of this move in GLD, but based on the dollar finding support, I flipped and went short. I've got the 2x leverage DTF short gold in the portfolio. I'm wondering if this long triangle that's been in place since 2016 and almost 15 has come to a close and gold's finally ready to sell off. So I'm moderately short gold. The dollar, I'd have to default to Alex on that. He tracks the currencies a lot more than I do. I'm almost wondering if a triangle is now complete in the dollar ready to move higher. Obviously, gold would move lower, euro lower, and so on and so forth. So if we can get above 97.33 in that dollar index, I think it's go time. So I like the short side in gold. And plus, I think gold over the last for a couple of years has had every opportunity to rally through 1370, and it just couldn't. It just couldn't do it. So when something should happen and it doesn't, usually means the other thing's going to happen. Okay, anybody else? Oh, all right. Dale, I'll do AMD for you. I'm actually looking for longs in AMD. Intel's been a truck through 51. I kind of like this AMD setup right here. I like when we're coming into, I think, a wave 4 with a wave 5 rally to go. I like doing specific option trades that have a slight positive delta bias, but also minimize theta as much as possible, or almost make it positive. So you can do certain butterfly trades that are slightly positive to get you up into the 26 area. But if we do go sideways in wave 4, you won't get hurt, or you can even make money if we do kind of hang inside of some kind of wave 4 before we push higher. So I'm moderately bullish in AMD. I'm looking at doing this trade in AMD. Semis just continue to be so, I guess, bifurcated is the correct word, because NVIDIA, I think, is incredibly weak, but Intel's trucking up through like 53. Intel's on the move. It's kind of like that old tech guard moving up, Microsoft and Intel and Google and Amazon and Facebook. Intel, I think, looks great. I think you've got 57 and change in Intel. It's a 1.618 projection of this wave 3. It's a 1.618 projection of this blue 3. So 57 3/4 looks like the upside target. That's a pretty good move in Intel. Intel's looking good. We did allocate some capital yesterday to Facebook. I put a half position on in Facebook. Stock's been so beaten down. I think it's potentially wave 4 completion. Just a nice little simple rally up, just a little pennant or flag or whatever technical pattern you want to call it. Showing a lot of strength. So we put a 0.5% allocation of the portfolio to Facebook. All right, perfect. All right, I'll finish it on markets open. We're going to leave it there. Guys, webinar, Thursday night trading analysis.com/MW. We are at tradinganalysis.com. We have stock, we have options, we have crypto, we have Forex. We've got an entire team. We trade real capital, full transparency, no smoke and mirrors. Only way I like to sleep with myself at night. you know what I'm saying. So come check us out. If you enjoyed the video, please thumbs up on YouTube, drop a comment below there, and subscribe. Definitely subscribe. And I think we're going to be good for next Wednesday. I'll be back from New York, and I don't have CNBC this week. Next week I'm on CNBC. So all right, guys, leave it there. Thanks. Have a good one. And hit us up on Twitter or YouTube, or come see us at Trading Analysis and the webinar Thursday. See you guys. Have a good one.